there. Now you had another follow-up question, Dan, from earlier. Can you please tell us about the strike of pain under the signature tools? Yeah, the strike of pain is a pinning tool. What some might use that term, a pinning tool. This is based on the max pain calculation that came out in the 80s. And what the max pain calculation did, it kind of gives you the discussion here. The max pain theory developed by BCA software. We're allowed to use it. We just had to change the name. But what this tool does is based on a calculation which looks at the value of the in-the-money and at-the-money puts and calls times the sort of open interest. But what it's showing us is the monetary loss investors would have of all the out-of-the-money puts and out-of-the-money calls times the open interest, and the in-the-money calls and the in-the-money puts times their open interest to give a mathematical value. And the place where that mathematical value is the lowest, where investors, in theory, investors who buy options would lose the most money, and option sellers will gain the most money, is the strike of pain. It's believed that that's where the stock will gravitate towards as you get to expiration. Okay, so taking some of our examples, we saw we'll use JPM. And I'll use the May 1st example, so for next week. Okay, so let's go ahead and submit this. So what we see here is what would happen if the stock was at 45. Every call option above 45 would expire worthless. So it's looking at the open interest of the calls and puts here. And of course, every option that's above 45 would be in the money. And we scroll down here and we see that the strike of pain for next week's expiration is $91. This is the lowest pain value, where if the stock's trading at 91 right now, that's where option sellers could expect to make the most money and options buyers would lose the most money. And in theory, it's believed that as you got closer to expiration, within a few days to expiration, this is the price that you would see the stock gravitate towards, the one with the lowest pain value, which would cause the most pain for options buyers and most profit for options sellers. As I mentioned, this was created in the 80s. I don't know if it was late 80s or early 90s. It was somewhere in that time frame, but okay. All right, so I just looked. Okay, anyway, this was back in the day when you only had monthly expirations. And in most cases, you only had 2.5, but most likely just 5-point option strike differences. Not 50 cents, not $1, right? Not $1.50, just 50 cents on just 5 points, or maybe even 2.5 points at that time. Why is this relevant? So we know that even in those days, a lot of the activity would come towards expiration at the very end. Buying and close, selling the close, rolling positions, adjusting positions, trying to get quick positions at the end of the week. The strike of pain calculation worked best in that time frame when you were within 1 or 2 weeks to expiration. Now it's a little bit tricky. With the weekly options and the advent of more, or the increase of more electronic trading, volume, open interest, and other things are going to change dramatically in the last 3 to 4 days heading into every week's expiration. So this is why it might be a little bit more difficult to use this as a relative and substantial tool, because there's so much activity that's going to happen for this next week's expiration on Monday and Tuesday and Wednesday, and possibly even Friday itself, that these numbers might bounce around between these two. What I'm really trying to say is I'm not going to go out right now and sell a 91 strike put on JPM, because this is telling me that this is where the stock's going to be, and this is where the option sellers would make the most money and option buyers across the whole chain would lose the most money. It's an older tool, but a tool that investors asked us for a few years ago, several years ago, probably 10 years ago, so we included it in PowerOptions. Also in this case, you could say, oh, well, May is a close enough expiration, so let me check what it looks like here. And so here it gravitates towards 90. not 91. In this case, it's 90. That's the largest pain value, though a lot of these are pretty close. And so what we have to look at there is saying that, yes, but there's 2 expiration cycles before this one and 2 weeks of unknowns going into 2 weeks of unknowns, excuse me, going into the what's going to happen. Some places are going to start opening up in the next 10 to 7 days. Georgia, Tennessee, a couple others. We all want to open up, let's be honest, but if things are starting to open too quick, will we get that thing? We'll have to see that in about 2 weeks. That could happen. So this stock could pretty much be anywhere. So in this kind of market, Dan, I don't know if the strike of pain tool is something to really base your trading off of as a pinning tool, because so much unexpected can happen and so much volume and open interest in there as well. And that could cause a lot of problems with trying to base your trading off of that as well. Okay. Pramod says, what criteria do you use to get the list of stocks every day? Do you mean in the general searches? Well, you can see that at any time. So you're talking about the married puts here. If I go to married put and I go to search, the criteria is shown for you right here below. We have the specifics that if we worked for us several years, and I always go back and check this every 8 months or so and compare it to just doing married puts or this kind of strategy against stocks in the S&P 5-star list, S&P Platinum list, NASDAQ 100 stocks, and more. And until one of those lists actually beats the combination we're doing for stock performance with this technique, we're not going to change it. But each strategy is different. So if you go into any strategy, if you go into covered calls and you go into search, for example, you can see the criteria listed right below, what we're using for the options, the underlying securities, for using any stock lists or sector lists, for example, based on the strategy. And we do offer those picks of the day, the weekly picks of the day for covered calls and naked puts in the monthly. And again, you can come right into the search and pull that up, and you can see the exact criteria that are being used for the stock, underlying fundamentals and technicals, as well as the options there also, Pramod. So you can see all of the criteria that we're using there for those positions. The different strategies, I'm sorry, Pramod, I should say, in any of the different strategies for the default searches we use, you can see them right there. And why are there 5 or 6 default searches? Well, someone might want to be a covered call trader and trade at the money covered calls. Some want more protection and go in the money. Some might be speculative and go out of the money. And then we have Ernie's results from his extensive testing on these strategies to see what performed best to maximize returns and have a high success rate. And that's how we develop the monthly picks of the day, and the weekly picks of the day as well. Okay, so let's see, there we go. Okay, so there's Sam's comment from earlier about the market was going up. If you think the market is going to tank, Eileen, you lose more in your short puts than your gains. The stock selection is important. Hot sectors too is to identify when the market is, okay, for the stock selection as well. Sam continues on there, say when the market is going lower in turnaround, those hot sectors will likely go on even higher. And that's why he had mentioned the gold earlier and some of the other things as well. Let's see. You can even follow volatility and make money. Oh, okay. So you're trading UVXY again there for the last couple of days, Sam, also. And you had Kroger, and that was a good trade. Now, Sam just has a question here for everyone, sort of. He's just curious. Got his Netflix bull credit spread position at 30% profit, and then the earnings, and then it dropped. So anyway, other comment here from Sam is that, is anyone out there trading MESO? And is anybody in MESO? I wanted to buy in the morning, but I did not. I see it would have been a nice trade. Well, I'm not Sam. Let's take a look at MESO here, see what we've got for that position, okay? All right, hold on a second. So let's just take a look back to the chart here, MESO. We'll keep my 3-month chart, my other criteria there as well. Oh, goodness gracious. So what is MESO anyway? ADR, okay. So yeah, it looks like they had a huge jump today from 6 to 20. 20 at the high, and then pulled back down to 16. Still good. Fantastic position. Is this optionable, though? Let's take a look. Yep. Okay, so it's a healthcare stock. Oh, Mesoblast. I'm sorry. I didn't see that the full name there on the other one as well. So it must have been fun. Let's see what the volatility was. Was there any good volatility yesterday? Thinly traded options, though. Not bad here, but that was probably just from today. See, the open interest was only at 29, 69, and of course 2,450, but zero contracts on the strikes above. That's pretty interesting. Look, zero open interest here for the at the money or slight out of the money 1250 put and the 10 strike put, but 1,200 volume today, 1,800 volume on zero open interest. So that's pretty phenomenal. That'll change there Monday as well. All right. Any of you, if you follow the Nigerians and use their tool for, what do they call it? The heat map, I believe. The heat map or the heat search. These two would probably show up in that search, I believe, comparing a current high volume to little or no open interest, I think is one of the triggers they look for there as well. It probably has to do with a virus, Sam. That's right. I'm not sure what the stock does either. A nice, huge jump there, 139.53%. How about that? I did see today, unfortunately, that Continental Resources took a hit today, of course. They're closed up their wells in North Dakota. They're the second largest producer in North Dakota. Maybe, no, they're the largest producer in North Dakota, Continental Resources. And I think they're second only to one of the companies in Texas. But Continental had to close their wells, and it wasn't the Burgess Shale. It was the whatever shale they're doing there. But it wasn't that effective. It dropped about 5%, and it took a hit of, yeah, it's been bouncing around. It was up 6% yesterday and dropped another 5% today when they announced that they were shutting down the wells there as well. Okay. All right. Okay. Well, ladies and gentlemen, I think I covered everything. I don't see any other questions coming in. We covered Terry's question on income method number 4. I tried to help Eileen as best we could there with some of the discussion on managing the naked put positions. And remember, go to the webinar section there, Eileen. Go to Option Strategies. The Managing Your Naked Put webinar was from 2015, so just scroll down for that. We took a look at some of the questions, of course, from Dan related to using SPY and QQQ ETF RPMs versus standard stocks or the stocks that match our list. And talked about the criteria that I used a little bit for Pramod based on our testing, and we do go back and look at all of the searches and all of the strategies at various times during the year to see if we can make improvements and then run historical testing on that as well. And we talked about the signature tool there, the, I apologize folks, the strike of pain. I almost said max pain, but the strike of pain tool, we talked about that as well. And some of the other things there also. So I just wanted to remind everyone, of course, that Maurice says, thanks, Mike. Have a good weekend. Stay safe. Thank you, too. You stay safe also. I just want to remind everyone, of course, that today's material are my thoughts and your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct trading suggestions. Options do involve risk and may not be suitable for all investors. If you like some of the tools you saw today with the search, we showed the portfolio tools in the beginning, how powerful they are to track the positions, and then, of course, evaluate the rollout opportunities where we do all the math for it. You can see the side-by-side picture. You can take a 14-day free trial at any time. Just go to PowerOp.com, put in your name and email address. No credit card or billing information is required, so there's no risk of being charged. And we'll send you a password. You'll start your 14-day free trial right away. And of course, the subscriptions after that start at only $45 per month for the end-of-day data. And then we do offer a delayed data service, real-time, and access to the full historical tools, which goes back many years of options data. We just saw a couple months of data. We were looking at the craft position. As always, you can get other free education at blog.powerop.com. We showed that webinars page, powerop.com/webinars.asp. Of course, always go to YouTube there, subscribe to the YouTube channel, and you'll get notifications anytime I upload a public video, which will likely be a portion of the discussions that we had on our Friday sessions, as well as any other live webinars that are held during the week. And of course, if you think of any questions later on as well, you can always email me, support@powerop.com or support@radioactivetrading.com. You can also call to talk to Ernie or myself at any time. Just call the office at 302-992-7971. And of course, remember, those of you that are on a trial or subscribers, you can schedule a coaching session at any time. It's a one-on-one session with myself or Ernie. Usually lasts about 35, 45 minutes. All right, so Maurice says, everyone be safe. Thank you. Maurice, you take care. You stay safe as well. Dan, thank you for your help, and thank you for your questions. I greatly appreciate it. William, enjoy my weekend watching Lego movies. I'm sure I'll get roped into at least one kid's movie this weekend, if not 2 or 3. But yeah, we'll go ahead and go through that. I'm sure the Cora, my 6-year-old there, she's going to be on the YouTube watching something. I think the 3-year-old likes Om Nom the most. Sam comments that tech earnings this week, it's going to be a big one. We'll see how the market's going to react if for lifting stocks with such as Apple, of course, coming out next week. That's going to be a big one. Microsoft, Amazon, Facebook as well. And we'll see how they're going to do after those as well. And Sam, thank you. Have a nice weekend. Enjoy being locked in. I hope you do too. And Pramod, thank you. You take care and you be safe as well. Ladies and gentlemen, thank you so much. Everyone enjoy your weekend. Everyone have a fantastic weekend. I'll try to get a couple of these videos cropped maybe this evening or first thing tomorrow morning, so you'll have some access to a couple portions of this video, probably the first 2. Of course, talked about Terry and talked about Eileen's comment. Try to get those posted by Saturday mid-morning or Saturday afternoon, so you have some content to sit back and enjoy and watch, as well as any of the archived presentations on the webinars page or on our YouTube channel. Have a great weekend. We'll see you soon. Good night.